going to do some macro analysis. And this, I don't know, it's not really macro analysis. We're doing big picture stuff. That's what we'll call it. And just so you know, this is uh, a video, big picture stuff. It's supposed to happen on Sunday. I want to do it when the markets are closed. I was waiting for this mic to come in the mail, so I have it to do better audio and everything. Still not the best, but a lot better than it was. I'm going to be continuing the video series, but I'm trying to do 3 videos a week, at least 2, but 3, 1 the video series, big picture stuff, which is going to be this one, and then also looking for opportunities video, which is going to be looking for like actual trades. In today's video, we're just trying to get an idea of what's going on in the market, what can we actually be. We're not trying to predict what's going to happen tomorrow, but we're trying to understand what is the case right now. So, short, I've been struggling with the iPad all night. So, but we're still going to make this nice. We're using our higher highs, higher lows, lower highs to determine our trend. And right now, we had this pretty significant pullback in the market, the S&P 500, but it's not that much more significant than any of these. There's a number of reasons why people are calling for a bear market at the moment. All of them potentially valid, but we have no confirmation of that yet. Like this is still a lower high. This is a lower high. Or excuse me. These are higher lows. Higher low, higher low, higher low. This one is just barely a higher low. It's basically equal points. But here's a higher low. So, there's a lot of stops here now. I wouldn't be surprised if price at least comes and swipes this before continuing, but I'm not making any predictions. We're just taking a look at this right now. Price has been going up and down, but primarily up. So, no reason to be big picture bearish yet on the S&P 500. NQ, it looks a little bit, just I don't know why for sure, but just the look of it makes me a little bit more bearish, potentially. Again, nothing is confirmed. Same with the S&P 500. We have this this sell-off here, but we're really still just putting in a higher low. This is a higher low. This is a higher low from whatever, this basically. This was kind of all consolidation. You have a fake out continuation. And yeah, this is all hindsight stuff, but there's no reason to be bearish. If I would start getting bearish if we have price come down below this low, then you can start being bearish. Eventually it's going to stop going down for at least a period of time, come back up, and then either somewhere in this area, or if it takes out these stops in this area, you can look for an entry on lower time frames, or you can look for shorts in individual equities that make up this indice. But I primarily trade individual equities, but I use these indices as a guide for what's going on. So right now, like, I look at this, I want to be bearish, but I've been overly bearish in the past, so I'm trying to be cautious. Um, I'm not making any definitive statements other than that, you know, as far as our higher highs, higher lows system goes, this is still bullish. Now NQ, which is interesting because it has been a large driver in the price, or excuse me, NVIDIA has been a large driver in price of NQ. You know, you had these stops, they were taken out. You had a stop run basically. So, and then we had, you know, this was higher low from here, higher high, higher low, higher high, higher low. This is a stop run. We didn't get a close above these highs. We did take those out, and then we've broken this low. So whether this turns around here tomorrow, whether it gaps up and goes up, doesn't matter. This is a lower low, which is the beginning signs of a potential downtrend. So I think to be fair, confirmation of this being in a downtrend, or at least a pullback, is, you know, we would put in another low, come back up, make a lower high, and then we put in a third lower low. And then from there, you know, you can start looking for entries going to the downside, or, you know, if you're long-term bullish or whatever, you can just say, oh, it's a consolidation. I'm going to look for, you know, some structure and then a breakout. But that's NVIDIA. YM looks very strong. The Dow 30. There's nothing to suggest weakness here. I'm not saying it won't be in a bear trend or whatever, pullback. It might follow the others. It usually does somewhat, but the only other things I want to look at is, so we've covered S&P 500. You know, can't say anything about it. I'm personally neutral on the S&P 500 as a whole. There are individual equities inside the S&P 500 that I am have a positive outlook on, and individual equities I have a negative outlook on. We have, I don't know, NQ, call it NQ or QQQ. Again, I'm remaining neutral. It looks more bearish. Yeah, you know what? I have to say S&P 500 that I am still reluctantly bullish. Again, I'm kind of a perma bear, but there's no confirmation of, you know, anything that would suggest expectation of further pullback. And then Dow 30, we're going to stay bullish on. So, and this isn't, even if I'm wrong, like if I'm wrong about NQ, this is not a bad weight to have. Like if you were looking at, you were trying to create a portfolio or a position that set yourself up for success in bull trends and bear markets, bull markets and bear markets. Being long on the S&P 500 while being short NQ is, and also being uh, long on YM. I don't know why that turned out like that. You're going to be pretty protected. You won't make a lot of money, but you're not going to lose all of your money. You know, in a bull market, especially in this past one, you would have maybe not done so great just because NQ is going up so much. But also, if that was followed by a bear market, you know, of course, the S&P 500 and YM and the Dow 30 are going to go down if the U.S. stock market crashes. But relative to the tech in NQ, the tech in NQ is going to go down a lot more. So if these are equal weights, okay, yeah, your portfolio is going to go down, but it it would be okay. Again, not what you should be like shooting for, but I'm just saying this hodgepodge, not very clear direction it's okay. It's not the best, but we're at a period where it's okay to tread carefully. But the only other things I want to look at, I want to look at real estate, um, industrials, and materials. So this is real estate. It looks like it wants to go back up. Obviously, it has gone up here. We have been in a period of pullback. Now, it's not clear to me if, well, I mean, it's been 3 months, almost 4. No, because we got to go to here. So, September, October, November, all of September? Yeah, so it's been over 90 days. Over 90 days, I feel like that's safe to say that is a solid pullback. But it's also kind of like a consolidation, right? And we've broken out. Let's try to draw a straight line for you guys. We've broken out with this candle here, and we're going up. So it's just something to keep an eye on. I'm not going to invest in like any real estate companies, but it helps me get an idea of what's going on in the world. Industrials are looking strong. I really want to see this continue upward. And yeah, that's that. I mean, there's no reason to short here. There's not really a good entry for a long. This would have been the entry. It's about is that like the fib? It looks like a fib level. I don't draw the chart or the fib very often. 618.5. Did I do it backwards though? I did. I did. Let's do it the right way. I think you're supposed to go from the low. Yeah, so, like 50%. Nope, it wasn't even 50%. Anyways, I'm not saying the fib works. The fib does kind of work sometimes, though. It doesn't work enough for me to use it. But anyways, partial filling of this gap and then go. That's strength to me. And since then, been pretty green. So I'm keeping an eye on my industrials. I'm going to keep an eye on individual companies in the industrials. If you click on security details, you can go to the website and they show you the weights. And in our scanning for opportunities video, we'll dive more into this. Industrials and materials. I'm trying to keep this short. This is take 2 of this video. The first one was like 45 minutes and wasn't very good. So this materials thing, I'm keeping an eye on, and I've been keeping an eye on for quite a while, because when the party in tech does stop, money's got to go somewhere. And I'm not saying this isn't going to go down. It probably will. This ETF will go down. But there's going to be some good opportunities. 60 to 80. There's going to be some good opportunities. And I think, like, if someone does think like tech's gonna go down like next month, you would be better off looking for short opportunities in tech than you would long opportunities in the materials sector. But I'm not confident that the whole inflation thing has been solved. And if inflation is still a problem, like, you still don't want to hold dollars, and every other currency has problems with inflation at the same time, where do you put your money? You continue to put your money in equities, but the tech sector is not doing that hot because the party kind of stopped. So where do you put that money? You take your money from tech and you just roll it into different equities. Was there anything else? I think that was it. In the other video, I mean, we'll look like silver, gold showing some weakness, but they've had like pretty big run ups for the past quite a while. This is interesting. I haven't looked at this in a while. Anyways, yeah, nothing wrong with seeing some downside there. Copper's looking weak, which this could be a great place to buy or go long. I mean, I don't know. I guess you would go looking for opportunities in copper miners. Oil, I don't know what to think about the oil. I like oil. I can't say much about it, but we're keeping an eye on it. It's not as strong as it used to be. Natural gas, we're also keeping an eye on it. I'm watching this. Well, like, obviously this breakout area here, if we start really climbing above it, and then it probably goes through this zone here pretty quickly, and it could find. I'm not going to try and call a top on it, but yeah, that's pretty much it. Let's go back to the Y30 chart, or Dow 30. Oh, I got rid of my drawings. But anyways, you gotta say, still a bull market on S&P 500, NQ. No confirmation on a bear market yet, but we're not discounting it. And then YM is looking strong. Real estate possibly looking strong. Industrials looking strong, expecting them to continue. And materials, not quite sure how this will play out long term, but hoping for a comeback. And that's pretty much it. So what we're going to do in the next video is we'll do a little bit more of a deep dive in, we'll do, we'll do a deep dive into looking for shorts in companies that make up the QQQ, and industrials definitely look stronger than materials, so we'll look for longs in industrials. We're also going to start building out our power earnings gaps. Earnings gaps. This is not great. I need the whiteboard. So, next video, deep dive. 1, looking for shorts in QQQ, see if there are any, see if there's not. 2, looking for long in industrials. 3, we're going to get ready for making money off some earnings. And that's it. We will have a continuation of the educational video series, and I forget when I put that video out, but we will do it. Thank you. Goodbye.